Welcome back from that short break with an extensive discussion with Dr. Simon. Here we are, Honorable Kasumu, all the way from Nigerian stock market platform in Lagos, is joining us right now to also explain to us this CBN rate cut and what will really happen with it on Nigerian stock market. Honorable, a good day to have you on the show, sir.
Yeah, good day to have you.
All right, so let's get down to the issue. Yesterday, it was like a good news, a long-awaited news from central banks to all Nigerian economists, financial experts, and stock market player like you. But how is the market reacting to the rate cut by CBN right now?
Well, for now, the market is likely going to react positively, but the cutting is far below our expectation. Because don't forget, we have about 3 countries in Africa that are almost the same rate. For instance, Egypt. Egypt started with an MPR of 27%. Ghana started with almost 27.5%. Today, as I'm talking to you, Egypt have reduced it to 22%. Ghana have reduced it to 21.5%. But for the Nigerian Central Bank or monetary policy decided to reduce it by 50 basis points. That is from 27.5 to 27. And this is not good enough. However, it gives us the hope that better days are yet to come. And we are expecting by November, much better reduction will be expected. Because the cardinal point that CBN used to raise the MPR was inflation. And for the last 5 consecutive months, the inflation kept on coming down. Even the most disturbing one is the food inflation. Today, it is a common knowledge that the price of the food items have drastically go down. And they are likely going to go further down because we are expecting harvesting in the month of October, November this year, and therefore more prices fall of the agricultural product are expected, and therefore we are expecting to cut the inflation down. The other side of it is the foreign exchange, but if you look at it, not only that we have achieved stability from January to date, but we still have some positive reduction in the foreign exchange. Today, officially, dollar is exchanged at less than 1,500 compared to 1,600 that they have started with. So in either way, all indicators is showing for the better. And to round it up, the GDP, the gross domestic, has risen to 4.2%. And this is the highest ever achieved in the last 4 years. Other fundamentals are showing all good for the economy. And therefore, we are expecting further deduction because reducing of the MPR, it makes the borrower to enjoy some relief from the bank because the banks are within the 250 basis point over and above the MPR. So before the MPR is 2.75% and they have up to 500 basis point, which means they can lend at 32, 33. Now it has been reduced to 250 basis point, which means that the best they can lend is 29.5%.
Exactly.
And this one is still higher compared to where our economy is going. So we expect further reduction so that the economy will be able to benefit from the recapitalization of the bank because they are washed with the capital so that they will be able to lend, and these will make the other sector of the economy to be more productive because the more you get capital, the more you increase your productivities.
Interesting. I really want to say that what you have said so far are quite laudable in this regard. But let's take a look at the stock market particularly. Some analysts just came out yesterday evening after my work day and taking a look at the response of reactions from many analysts, stockbrokers like you. They are saying, for instance, that this rate cut would definitely redirect liquidity from fixed income to security stock, But what do you make of that statement that for what have happened right now, majority of Nigerians who are in that corridor of stock particularly fixed income will not be going toward the stock market in a way. What do you make of that assertion?
Well, you see, it will take longer time. Because today, you are talking of 27 MPR. Still, we are getting bond and commercial paper that are running between 22 to 24, 25%. And that is even good. If the MCR, the CRR, and now the CBN agree that 250 basis point minus 250 basis point, what it means that from 27, you can deposit your money with the CBN at 24.5%. And if that continue, bank would rather prepare to deposit their money with the CBN at that rate rather than to lend it and start pursuing the lender. And what it means that equally, the depositor will still maintain their deposit with the bank if they can get 22, 23% because of the volatility of the capital market. And many of the investors, they want to avoid the risk. So I don't see much inflow. That may happen if the MPR has further been reduced, maybe to a 20%, then people will look into it. In any way, those who choose to take the risk, they got it right. Because I know stock like Wako, Lafarge Africa, moved from 30 Naira to 120. That is more than 300%. And similar other banks like GT, Venice, many of them have gained more than 100% within this year. And that shows you that the equity market is the market to go, which will not only hedge you against the inflation, but give you the fantastic returns.
Interesting. I really love your submission in that regard, because for equity market, it's a sure banker, and with recent development in the Nigerian stock market, we have seen that the equity market is really a sure banker, a place to put your money at any time. But going forward into this discussion, we also saw one of the reasons why CBN really take this decision. They are talking about a balanced economic growth. What do you make of that? Talking about balanced economic growth, to push for growth and to balance the economy in a way that, even though you made mention of the inflation that really come down, but for the CBN, they are taking a cautionary move. But what do you make of all this, sir?
Well, you see, CBN can only deal with the monetary aspect of it. And that is the only side of the economy they can handle. The other side is the fiscal economy, which is outside their control. Who control the fiscal economy is the Federal Ministry of Finance and the federal government in particular, through the Federal Ministry of Finance. If you look at it, the fiscal policies are not in that tent. One is the tax. Our tax is on the high side. Two, the distribution of federal government cash. If you look at it now, we are talking about 1.8 trillion from less than 1 trillion in the previous year. So therefore, the federal government, the state, and the local government are washed with liquidity. And if this money is not properly used, are likely going to be channeled to trigger for inflation. And that is one aspect that is outside the control of monetary policy. That is why they are on the cautious note. Because they cannot do otherwise on that aspect.
Interesting. But let's take a look at the good news that the CBN governor announced yesterday. He did mention that 14 banks have now met the recapitalization requirement. Mr. Kasumu, I know you guys play a big role in this achievement of the Central Bank of Nigeria. Most of you on the stock market platform. But what do you have to say about these banks? And the recapitalization exercise, it has not ended, but 14 banks have already made that 1 trillion and above when it comes to requirement.
It is a welcome development, and everybody in the capital market welcome it. Because day in, day out, financial sector contribute between 60 to 70% of our activities. So therefore, now banks have a lot of shares full of liquidity. Today, without any fear, you can trade, you can buy and sell 1 billion shares of any of the banks in this market. That tells you how liquid the market is. And that attracts the foreign investors because they like liquidity. And these are the banks, because of the increase of their share capital, most of the banks today, they are talking about 40 to 50 billion ordinary share. And these move most of our bank into trillion capitalization. Stock like Zenith, GT, Assets, UBA, they are all talking between 2 to 3 trillion of the market capitalization. Priority to the increase of the market capitalization of the bank, none of them meet up to 1 trillion market capitalization. And therefore, they are not even among the top 10. Today, we have about 3 to 4 banks among the top 10 of the market, capital market. And these top 10, they are the ones that control between 70 to 80% of the market capitalization. And banks are there. So we are happy with it.
Exactly. Interesting. Talking about the top giants, although out of the 10, we have the 4, although literally they call it the 4 big recapitalized or the 4 big high stock company in Nigeria. Although I could mention that GT Bank is there, Boa Cement is there, and Dangote is there. But take us through the stock market for today. How has the market been, with the news of the court and what has really happened so far on the Nigerian stock market?
Well, the market is not doing bad. We have seen many stocks are getting up, and we are expecting to see more. But we want the CBN to release all those banks that have applied for interim dividend. So far, 4 have been released. Remain 2. We are expecting more of it. But when you look at the oil share index today, it's in the positive trend.
Exactly.
And we are expecting this to continue. And the reason is very obvious. But when you look at it, banks are among the top gainers. Stanbic is one of them. Remember, Stanbic approved 2 naira interim dividend compared to 1 naira of the previous year. And also Zenith approved 1 naira 25 kobo interim dividend compared to 1 naira it paid last year. GT is not left behind. They declare 1 naira interim dividend compared to 1 naira they paid last year. So there is no change. But we are still waiting for the access and fidelity. And we hope this will be released. And once they are released, the interim dividends are all likely going to be paid in October. And what we are saying that we are likely going to see another rally of the market by the time we enter in the last quarter. Because the third quarter result will be out, and we are hoping that most of them will meet of the market expectation. Full of the interim dividend that is washed with the investors of the money. So most of them are likely going to take position. Already, we have seen some certain stock have started gingering for the third quarter result.
Interesting. But before I let you go, there's a proposal on the table of Nigerian Exchange Group, NGS, that they want to expand trading hour from 9:30 to 2:30 to 9 a.m. to 5 p.m. What do you have to say about this time expansion from 9 a.m. to 5 p.m., unlike what we are right now of 9:30 to 2:30?
Well, you see, it's good to contact the stakeholder. We are one of the stakeholders. It is a welcome development, but I will prepare to hold it gradually. If you move from 2:30 to 4, let us see what that achievement will bring to the market before you move it to 5 p.m. Don't forget, in the Nigerian economy, most of our offices close by 5.
Exactly.
The market, even by the time the market closes, you need to go back, raise your contract note, do some other, and write a report of the market. Therefore, if you close it 5, it means that most of us, we have to extend our working hours, or alternatively, we ask exchange, don't move it to that. Why don't you move it to 4 or 4:30? Let us see what we'll do. Most of the time, even now, when we start market, actual trading started between 10 o'clock to 2:30. And that you are talking 4.5 hours.
Exactly.
So why don't you increase that one by maybe 50% to take it to 4? And let us see what the relate. Because even the 4 hours 30 minutes that we are trading, you see most of the activities started in the first 1 hour. That is between 10 to 11. And therefore the market was a bit go slow until 2 o'clock. In the last 20 minutes, you see most of the changes coming toward the last end. So if you extend it to 5 o'clock, what it means that the gap may not see much of the activity, and the activity may likely come toward the end of the day. That is between 4:30 to 5.
Exactly.
So I will prepare to please gradually increase the time, not suddenly post from 2:30 to 5.
Exactly.
I don't subscribe for that. I will have rather subscribed to move it at best to 4 or 4:30. Let us see what we achieve with that increase. Then, if the need arises, we can move it beyond that. The developed market, like UK and New York, they are looking for 24 hours trading. It's not impossible with the machinery we have, with the system that is operating. But are we there for it all? The answer is no. Currently, as I'm talking to you, LSD, FMDQ, they are all closing by 3 o'clock.
Exactly.
That is 30 minutes ahead of the exchange. But what do they achieve with that 3 o'clock? It's not much different from what we achieve with the 2:30 o'clock. So at best, I want them to do it gradually. It's a welcome development. The more, the better. But let us do the technical analysis to find exactly if the market needs all increase of 2 hours, 30 minutes, or 1 hour, 30 minutes, or 2 hours.
Exactly.
Let's do the stakeholder discussing before we increase it up.
Exactly.
Don't forget, the exchange has already moved the trading instead T+3 to T+2 starting from November.
Exactly.
So, and they aim to go to T+1. But they did not go to T+1, they start with T+2. Let us see how we move into T+2, then we move T+1, like what we've done in UK and in New York. And we are ready to go for there because the machinery and what is in the place are ready. Nobody issues shares for buying shares today.
Exactly.
Everything is transfer. And since there's transfer, you don't need to spend 3 days waiting to get your payment.
Exactly.
T+1 is the most ideal, or T+0. But T+2 is better than T+3, and this will be effective from November. And we are waiting for the implementation of this and to see what trend will do, what increase of the volume and the value of the activity in the capital market will do.
Exactly.
Before we move to T+1.
Exactly. Very interesting submission from you, Honorable Kasumu. I really appreciate you coming on the show today. And I will say your submission on this regard of the time expansion is also very large. It's a developing issue. Definitely, we still have to visit this. This issue on one of our submission edition on the market report. Thank you so much for coming on the show today, sir.
Thank you for having me.
All right. So enjoy the rest of your day in Lagos.
Okay, bye.
All right. I've been speaking with Honorable Kasumu Garba Kurfi, who happens to be the MD, CEO of APT Securities Fund Ltd, based in Lagos, one of the stakeholders in the Nigerian stock market, having explained his own understanding of this cut in interest rate by Central Bank of Nigeria. Very interesting package, I will say today, talking about the interest rate cut by CBN. It's generating a lot of dissection discussion across Nigeria today. But it's a welcome development. And I will say, well, here we are, this is the level of, our time for closing the show has really come, and we have to go till another time. Till come your way again, my name is Adefola Olamide. Have a great day ahead of you. Bye.